Hello everybody and welcome to this week's Motor Trade Radio podcast, brought to you in association with eBay Motors Group. It is Saturday the 31st of July and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. This is episode 40, season 7 of Motor Trade Radio, bringing you all the chatter that matters. And once again, we've gathered together this week's big car retailing stories across the franchised and independent sectors for you to enjoy all in one place, on demand, on your podcast feed.
Well, it's a packed show this week, and I'm glad you're with me on this challenging IT morning that we seem to be having, Curtis. But I mean, what a week to have.
It's my turn to have IT issues this week, so do bear with us, please.
Yeah, on a week like we've got this week, I mean, we've got an absolute packed show this week. We've got an extract from this week's special exclusive interview, and we've got our monthly catch up with Cap HPI, and we're trying to do that in between facing technical challenges. But what a busy week, and you know,
yes.
we've a fantastic interview there with Mike Allen from Zeus Capital, and a very good friend of the show, and he's been on over several times before. But we did manage to catch up with him this week on the back of an exclusive key themes report for the sector that they've published, which is only available to investors. And Mike was gracious enough, and he wanted to share some of the insight and thoughts around some of the content of that report with the podcast listeners, and also for any investors that may not have received it, to reach out to him and get a copy. But that was a fantastic interview there with Mike.
It was indeed. So we'll have an extract of that later on today's show, but do check out your podcast feed for that, because it is fascinating, and it's, as you say, it's themed around these 5 key themes that Mike has identified. Now, Phil, as you say, we have got a packed show ahead of us. We've got headlines from AM Online, Motor Trader and Car Dealer. And in the second half, we'll bring you a roundup of what's happening in the franchise sector. But to get things underway, we'll begin with a special focus on used car trends, starting with our monthly look at used values. And today, we're delighted to welcome to the podcast Jeremy Yea, Senior Valuations Editor at Cap HPI. And he'll be joining us, well, he's joining us right now for our monthly update on the used values. So welcome to the show, Jeremy, and many thanks for standing in for Darren Martin, who I understand is now on a well-earned holiday.
Yeah, hello, good morning. He's the lucky thing which is on holiday at the minute. I wish I was in a sort of similar place right now, floating around on a lilo with a pina colada and enjoying some sun. So it's great to be here. Thanks for having me.
I think with the IT issues that Curtis and I are having this morning, I think we wish we were there as well, in fairness.
Yes.
Even on the Lilo next to Darren would be fine. But again, fantastic and appreciate you are stepping in for Darren, and your first time on the show, and you never know, it might be Darren's replacement. We'll have to be careful how we go here. It depends what you want to do there, Jeremy.
Careful what we wish for.
Exactly.
Absolutely no pressure, Jeremy.
So again, welcome to the show, and a big warm welcome from Curtis and I, and obviously all the listeners today. But obviously the figures are now out for July, which are the going into August for the movements from Cap HPI, which we've seen a 3.1% increase at that 3-year 60 point, and this is obviously the 5th successive month of growth for used values since March of this year. So do you want to talk us through what you've been, a quick preview, a sneaky preview in terms of what to expect in the editorial when the listeners get sight of it?
Yeah, no problem at all. We've seen another rise in values this month, and as you said, it's another average move at 3.1%. a 3-year 60, and it's the fifth month in a row of rise. Of the first month of rise was only 0.1, which is very, very small, but it's now totals, a remarkable 16.7% increase over this period, and actually it's 13.8% for the year, which is remarkable and staggering, really. And to witness and from this, place that where we sit is just absolutely fascinating, And we didn't think it would probably go up quite as much this month. We thought it might be maybe a 1 or 2%, but it's exceeded our expectations and gone on for another plus 3%.
No, definitely, and I think as you say, it's you look at any historical figures from that same period, and we've not seen anything like it before, have we? I don't think.
No, I think take out the last 2 months, and this month would be a record increase. And previous to the 2% we had in May, this is the previous record was a 1% increase, and that was back from the after the financial crash. So we're definitely in, and I know this word gets used a lot in unprecedented times, but we clearly are, and to be nearly 14% ahead for the whole year is just it's fascinating. It's incredible.
And talking of those rises, Jeremy, we've now seen a 16.6 rise in wholesale values since April, and that equates to an average of £2,000 on a 3-year 60,000 mile car. What impact is that having on advertised prices among dealers?
Yeah, well, we've been tracking retail because we've got a very large retail database, not just the trade database, which we have access to. We've been tracking retail pricing for a number of months for obvious reasons, and we can see that pricing has increased. And I think this, the trade market has pushed up the retail pricing, and we've been tracking it, say, for the last 3 months, and we can see that prices have been steadily increasing over the last few months. And I think it's quite difficult for dealers to do this, especially across aging stock when they're pushing pricing up. But if you're brave enough to do it, we've actually heard there's been some degree of success of doing it. And it just depends on how each business operates and what their overage policy is for some of those older vehicles. But yeah, we can just see it tracking upwards.
Yeah, no, you're right. It is about, like you say, being brave and sort of maybe in some cases stepping away from normal pricing policies within the business that reacting to, as you say, that unprecedented, unseasonal market that we're starting to see, that actually it's about capitalising on that profit. So, and just thinking around trade values and seeing the used values track higher than what consumers may have paid for them previously. And I know you've probably got many examples of this, but do you want to talk us through some of the sort of maybe not so obvious price increases or value increases on some of the cars in the market?
Yeah, sure. I mean, it's been well publicised of late. Coupe, cabriolet, sports cars have been going up at a phenomenal rate, I guess, where people have had money to spend and want to reward themselves and enjoy the summer in either convertibles or sports cars. But there are some other ones which stick out. So the top 20 of the list I've got in front of me now, which are the rises for the last 6 months at 3 years, 30,000 miles. But away from the cabriolets, there are some others which have gone up by some huge amounts. We've got Suzuki Jimny. I think this has been mentioned before, to be fair, in other press releases, but that's at £4,200. Kia Soul Electric, that's quite surprising, really, being an electric vehicle. That hits at sort of 21st on the list and at £3,850 in terms of percentage, that is, not pound notes. Ford Kuga, petrol, 12 to 20, that's up over £4,000. A staggering £11,800 for a Mercedes SL class petrol. Even Vauxhall Mokka petrol, that's up nearly £3,000. Volvo V40, £3,500. Toyota Auris. The recovery of hybrid vehicles of late, since I guess the world has come back alive, and restaurants and pubs, and with the taxi market being alive. Kuga Diesel, again, that's gone up by over £4,000. So there'll be plenty of cars around sat on people's driveways which have risen considerably.
And some not the obvious ones. I mean,
Yeah.
you wouldn't have predicted a Kia Soul Electric going up at that sort of movement, would you, in previous years or months even?
No, for sure. It's definitely some of the vehicles which have gone up. I think some of them do look price range and did lose quite a bit of value during the last during the last part of last year, maybe the last 6 months, and they've recovered. So, some of these have just recovered within that time, but other ones have just been dragged up by some of the ones which have risen, massively in the last 6 months. So yeah, some average price range cars in there which have gone up, hugely.
I'm beginning to wish that I'd bought myself a Suzuki Jimny, Jeremy, let alone a SL class.
Yeah. Suzuki Jimnys are always a good investment, to be fair.
Yes.
Even those early ones are always, as we start to see some snow hit in the winter, that everyone clambers to buy Suzuki Jimnys, don't they, as a cheap 4-wheel drive to get them out of a difficult...
Yeah, and now a good investment.
Exactly, yeah.
Absolutely.
Now, Jeremy, following on from that, you've mentioned about the Cabrio convertible sports car sector performing strongly, and indeed, Darren, over the last 2 or 3 months, he describes them as toys and treats, and he's tracked the strength of that sector. But are there any other sectors that have stood out over the course of the month in terms of rises?
Yeah, for sure. So if I just look at this month alone and give you the sector rises of just August, or what we measured through July going into August, but we've seen some rises within lower medium. That's the highest rising one at 4%. MPV's gone up 3.7%. Super Mini and City Car both up 3.2%, and the remaining sectors have gone up between 2 and 2.7%. So we've sort of seen some of the price range vehicles which have gone up the most this month, which again has probably been dragged up by some of the higher risers or the more expensive vehicles within the market. But in terms of the longer historic view, well, where do I start? There's plenty of models, like I've said just now, that we could be here all day talking about them and probably have a really good conversation about them. But the last few months we've got over 250 generations which have risen, at that 3-year 30 point in the last 6 months. So that's 250 generations at over 20%. So yeah, it's crazy, really. But in terms of what's happened in terms of sectors for the last 6 months, well, again, I don't need to go on about coupe cabriolet, but that's gone up on average £5,300 in that period. Sports cars are up £5,700 during that period. Executive cars, so your Audi A5, BMW 5 Series, etc., up 3,600. SUVs up 3,100. Lower medium, which is the medium-sized hatchbacks, 2,300, and Super Mini up 1,700, and City Car up 1,150. So yeah, everything's gone up and gone up by a good chunk.
Yeah, I'm so glad I'm in the market to buy a car. There's nothing like timing, is there, Jeremy?
Yeah.
Yeah.
You would have thought, Phil, with all your insights, you would have bought a car earlier.
I should have bought one 18 months ago. I'd have been fine, wouldn't I?
I was worried about buying a car for my wife in January, but what did I need to worry about, I guess?
That's it, isn't it? So, no, mate. I mean, finally, and it's a fairly big question, I suppose, to a certain extent, Jeremy, but the big question is, and we talk about will the summer of strength, the phase that has been coined by Darren a few times now, and previously we've talked about the year of the used car, etc. But what can listeners expect over the coming months? We've seen 6.8, 4.7, 3.1. We're talking about the market strength, that movement year to date, etc. But what's your view over the next few months for the listeners?
Well, we still stand by the summer of strength. We think the market is going to remain stable, certainly for the next few weeks, and it could go beyond that at the minute. But it just depends, I guess, if the retail demand stays at similar levels to what it is now. It's really quite tough to sort of predict, and obviously with the lack of returns coming into the market from fleet and rental and what have you, and new car availability, it's really hampering. So we can see it probably going on for a little while yet. If it goes beyond the summer, it probably wouldn't surprise us, but I think probably stability would be the word I would. Again, it's probably a word which has been used quite regularly, but stable from here on in. Like I said earlier, we thought maybe a 1 to 2% increase going into this month, and exceeded our expectations. So would it really surprise me? It probably wouldn't. If it goes up again, to how much? Well, is anyone's guess.
No, definitely. I think you're right. I think there's no sign of a drop off as yet, is there? Which is obviously what many people are probably asking you on a, if not a daily basis, but a regular basis. As you know, when we'll see this cliff coming. But actually, even if we see some stability over the coming months, it's not declining anytime soon, is it?
No, I think. Do you know what? I think if it dropped ever so slightly at 1 or 2% a month, given the high point of where we're at nearly 14% for the year, it was a big swing to get back to sort of normal, whatever normal looks like now.
Yeah.
Completely forgotten, given the last couple of years, really, or 18 months at least. But even if it drops back 1 or 2%, we're still in a very strong market, towards the back end of the year. So, I think it's stability again, stable is how I would describe it. Long may it continue.
Yeah, no, absolutely right. And Jeremy, many thanks for joining us today. Hope you've enjoyed your debut on the Motor Trade Radio podcast. And thanks for providing this exclusive insight into the June figures. Now, the editorial is actually available on the CAP HPI website now. So any listeners wishing to take a deeper dive into the month's trends can head over to the caphpi.com website and click on the extras tab and select editorials, which is where the car report and indeed the LCV report will be found. So many thanks for sharing all that with us, Jeremy.
Absolute pleasure. Thank you for having me on. I really enjoyed it.
You enjoyed that little chat with us, yeah. So apologies for all the IT technical things, but for your debut to the show, we are normally a little bit slicker without the IT technology issues. But no, it's been a pleasure, Jeremy, and I know that we can fill hours talking about the market and what's happening. But as Curtis has said there, please head over to the CAP HPI website, have a deep dive, and as Darren always says on a regular basis, the market's changing daily, not monthly. So keep a close eye and listen to what's happening coming from you guys. So again, as Curtis said, thank you for today, and it's been an absolute pleasure having you on.
Thank you very much, guys.
So that's it. So we'll move on to some headlines now then, Curtis, hopefully. So we've got, again, packed headlines, and we will, but a great chat there with Jeremy.
Yeah, no, great chat there. And we're going to stay with used cars. So the first headline is from Car Dealer, and it's used car buyers spending longer online researching next purchase and use more search platforms than pre-COVID. So this is based on some research carried out by eBay Motors Group. And it's showing that consumers are spending longer searching for their next used car and, as I say, visiting more platforms. And these are actually amongst the key findings of the 2021 Digital Touchpoint Survey, which it polled the view of 2,000 buyers in June. So this is really topical, and compared the findings with the last survey, which was conducted pre-pandemic in October 2019. So with used cars in high demand, buyers are currently spending an average of 6 weeks, so that's 42 days, searching online for their next purchase. And that's actually up from 40.5 days in 2019. Now, a significant majority of buyers, so that's 91.5%, continue to use at least 2 car search websites, and that's a rising trend since 2019. Now, while those using just one website dropped from 11.4% to 8.5%, so some clear messaging here that buyers are spending longer online researching their next car, and they're using more platforms. And the research shows that the use of multiple platforms, a lot of that is down to just checking the prices advertised are the best possible prices.
Yeah, it's probably on the back of what we were just discussing there with Jeremy, with the strength of that used car market, that maybe the consumers are just, like you say, just second guessing what the price of those vehicles are, or trying to just find that car that they're after, because we know that cars are in short supply, so therefore it's not only short for the dealers trying to find the right cars for them to match their stock profile, but consumers are probably doing the same. And there's plenty of talk obviously around those new car buyers that we've talked about previously on the podcast, haven't we, Curtis, that are moving to used cars now as well, because they don't want to wait for that new car that's got the long long lead time ones. So again, heading over to the used classified platforms to search for that used car, rather than just reorder their new car that they may normally have done.
Yeah, and I think the key stat is that the average used car buyer is currently using 3.5 websites during their car buying journey. So yeah, that is quite significant.
And heading over to Autocar now, and this is a story about Stellantis. Now, Stellantis seems to be in the headlines on a regular basis, but the headline is that Stellantis thinks big on used cars, and this is about their launch of Spoticar over in the UK, which is their multi-brand approved scheme for their dealers. For their 14 brands that operate within the Stellantis business, and this is a program, because it is a pre-owned program that they've got that's been operating across the European market for some time, and this is a certified pre-owned program as described, and I think the UK is actually the 10th country that this has been launched in, but recently launched, and it's been on the back of their recent acquisition of Motor Depot in the UK as well.
Yeah, now Spoticar, that was a new name to me. I know you were familiar with the branding before, Phil, but I actually saw an ad just last week for Spoticar. I've never heard of the brand, but I did notice that the only vehicles shown in the ad were Peugeots and Citroens, and that's really the key to this, because it is this approved scheme which will replace existing approved schemes for Peugeot and Citroen, but also significantly Vauxhall. Now, listeners will know that the Vauxhall Network Q was, well, it was the first approved manufacturer scheme, and that was launched as long ago as 1990. So that will become part of Spoticar, but it doesn't actually end there, because I've been onto the Spoticar website this morning before recording this, and it is multi-brand. You can go on there, you can find Audis, Mercedes, brands from outside of the Stellantis group. Now, the website was launched in the UK in June. And this story alludes to a sort of gradual rollout with new features, new tools being included. I think one of the ones they mention is a PX tool that will be added, and a finance calculator. And by 2022, you will be able to buy cars totally online. So it is a significant launch here, and it is an example of a manufacturer really getting in on that used direct sales that we've seen Cinch and Kazoo entering into, and making a market of. Definitely,
and you can sort of see if you've been watching the Stellantis sort of growth since the merger. Not just in the UK, but across Europe and some of the international markets, where this and aligned with the agency modelling that we've been talking about recently, that the new distribution network of how they're looking. This is if you think about it, the volume of vehicles that will sit within the Spoticar brand. I keep nearly saying Spotify, but I've got to get this right.
It's a bit too close.
So sit under that. If you think of the volume that the Stellantis brands bring to that single used pre-owned certified program, is huge in terms of that volume of vehicles. So from a consumer branding, whereas previously you had your network queue for the Vauxhalls, you one for Citroen, Peugeot, etc. This is one brand, one pre-owned program that sits across all the majority. I know not everybody is under it as yet. Some do sit outside it, that are continuing with their own approved scheme for the time being. But this is really Stellantis making that move in that B2C classified direct consumer brand marketplace. So one that we'll be watching closely.
Yeah, and definitely worth heading over to Autocar to check out that story. It's written by Jack Carfrey, and he does actually mention that Fiat and Jeep will join Spoticar in Q1 2022, but DS and Alpha, interestingly, will remain separate. So I think we can look out for maybe a sort of more premium service for those two brands.
Yeah. So now we're heading into the world of financial updates, and again, at the end of this, we will play you a snippet from the interview with Mike Allen from Zeus Capital that does talk around sort of the financial performance of the first half of the year for some of these operators, and then obviously what to expect for the second half of the year. But the first one, we're heading over to Car Dealer, and this is that Pendragon increases its 2021 pre-tax profit guidance to between 55 and 60 million, and this is that June strong close plus continuing momentum in the used car market has exceeded their expectations, and that the exceptional growth profits have made per unit. So this is sort of on the back of that used vehicle profit per unit, which is supporting what Jeremy was just talking about earlier.
Yeah, a significant upgrade there. You're listening to All the Chatter That Matters on Motor Trade Radio, brought to you in association with eBay Motors Group. This is your weekly one-stop shop for all the biggest car retailing headlines, and available on demand wherever you are on your podcast feed. Now, we have got some more franchise financials here. So heading over to the Express and Star, and the headline there is Lookers upgrades profit forecasts. So this reports on that the board now expects underlying profit to reach 50 million in the first half, compared to a loss of more than 36 million last year. And Lookers has sites obviously across the country, and it does say that underlying profit before tax is expected to exceed the board's previous expectations. So some welcome upbeat news there from Lookers.
Yeah, definitely. As you say, I mean, they've been through a turbulent time. We covered it throughout last year, didn't we, on the podcast? But again, great that they're starting to see a recovery. Great that they're now posting some significant profits. And as the CEO Mark Rayburn says in the release, that the business has delivered an outstanding performance in the first half of the year, despite the multiple difficulties presented by the pandemic. So a great upbeat message there from Mark on the results of Lookers, and it's great to see them return, and great to see the shares back on the market and starting to post some very positive results from the business.
Yeah, and heading over to AM Online, the headline there, Virtue Motors 2021 pre-tax profit forecast upgraded by 60% in a month. So this is a report on Virtue, and it suggests that 2021 pre-tax profits could be up by 60%, more than forecast just a month ago, after continuing its exceptional performance in the used car market. So this is actually its second trading upgrade in a month. And its adjusted profit before tax for the 6-month period ending August 31st would be no less than £40 million. So, a welcome update here from Virtue. And it now anticipates adjusted profit before tax for the current financial year ending February 28th, 2022 will be in the range of 40 to 45 million pounds, and previously that was 28 to 32 million pounds.
Yeah, and there's a little bit in the story there about so far in 2021, and we know that Virtue added the Huddersfield Hepworth Honda site in March to become the Japanese brand's largest European franchisee for Honda there. They also have added Citroën into the Macclesfield Ford dealership and Kia into its existing VW showrooms in Nottingham as part of a multi-franchising drive, and completed the 1.5 million development of a new Macklin Motors Motor Nation used business and showroom in the former Lookers VW van centre there up in Glasgow. So busy year for Robert, and he's recently managed to find time to be on the Undercover Big Boss as well, which is due to air on ITV soon. So a busy time from Robert there.
Yeah, I'm glad you mentioned that, Phil, because I did see an advert for it, and I'm pretty sure that Robert's wearing a wig
Yeah, you
for
keep an
this.
eye on it. He's probably wearing
Yeah.
more than a wig. He's probably been in makeup for some time, but yeah, more on that one later.
And the final financial update is from Motor Trader, and its Inchcape sees first half profits surge to £61 million, and that's compared to losses of 188 million last time on turnover that's actually up 37% to 3.9 billion pounds. So pre-exceptional profits were 143 million compared to 9 million pounds last time. And in the UK, the company generated revenues of 1.05 billion compared to 809 million last time. And that's despite showrooms being closed in the first quarter.
Yeah, and it looks like they've been doing a little bit of restructuring across the market as well, because in Russia it's sold its Toyota and Audi retail businesses to generate 110 million. In Belgium it sold 3 sites for 1.9 million, and its retail business in Luxembourg in January of this year as well. So a little bit of a shuffle around there from Inchcape in the first half of the year as well.
Yeah, and it's also signed a global strategic partnership with Geely, which I think the first signs of that will be them handling the distribution of Geely in Chile. So interesting one to watch there.
Definitely. So, staying with the franchise dealer sector, and next up we're going to play a quick extract from, as I said before, the earlier interview with leading analyst to the sector, Mike Allen from Zeus Capital, and as we said before, he's discussing one of his 5 key trends and themes for the sector. So we'll head over to that snippet now, but I do urge you to head back to the full interview that is still available on your podcast provider. Digital sales. I mean, clearly there's a move to digital, and the omni-channel has been accelerated, as we know, by the lockdowns. But what's your view on the opportunities and potentially the challenges facing dealers, especially with the introduction of the disruptors, as they are keenly themed in the sector?
Yeah, no, I mean, it's a really interesting area, and I think, to be totally fair to a lot of the PLC dealers, they've had this digital infrastructure in place for some time. I mean, I remember Robert Forrest talking 4 or 5 years ago where, people could order a car from the Virtue website and not visit the dealership, and it to be delivered, etc. So that's been in place way before COVID and the emergence of some of the disruptors. However, I think it's clear that COVID and those disruptors coming at that time probably accelerated the consumer being ready for that technology as well, and having to need and use that technology. So I think, and I think the emergence of the disruptors has actually spurred some of the dealers on as well at a time during COVID. So, for me, I think it's particularly, I think the industry's really raised the game on the back of COVID, and we've seen the impact of that in the financials to date. The business models have been very agile, and I think the consumers now are confident to kind of buy a car purely online and get it delivered if they need to. I don't think it's all about pure digital retail, though. I don't think the industry is going to go completely online and digital. I think that there are customers out there that will still want to transact physically at a dealership and get that reassurance on what's a high-valued service. And some customers will want to flex between, online and, doing maybe some of the boring stuff online and going to the dealership to collect the car and kick the tires with a salesperson who knows a lot about it. And I think the right approach, and we look a lot at the US dealers, and I think CarMax has been consistently the kind of best performing kind of car dealer in the US in terms of delivering value to shareholders. And when we looked at their capital market today, it was very much kind of allowing the customer to dictate their own journey between digital and online. And I think that a lot of the dealers I talk to, the bigger dealers, have got that same strategy, and I think that's the strategy that will work. A final point on the disruptors, because I actually think the likes of Cazoo have done a good job actually in educating different investors. The sheer size of the market opportunity, particularly in used cars. So I think their introduction into the industry hasn't all been negative. I think there's been some positive factors, and sure, there is going to be more kind of competition, but as you know, Phil and Curtis, there's a huge market opportunity there, and I think there will be enough for the Cazoos and the Cinch to get their slice of the market, and the well-run PLC dealer groups as well, in my opinion.
Well, I mean, it's just fascinating, isn't it, Phil? And we had a really good conversation with Mike, and he covered a lot of ground. So, as Phil mentioned, do head over to your podcast feed to catch the whole of that interview. And he does go through the 5 themes in some detail, and a lot of it. Although it's relevant to the franchise sector, I think anyone selling cars will be interested to hear what Mike has to say at the moment.
Definitely. So heading back to AM Online and sticking with sort of acquisitions and franchise dealers, etc. And the latest is that L&L Automotive acquires Mercedes-Benz retail group in Hemel Hempstead recently, and a great move there. And we know that the Mercedes retail group have sold off some of their sites previously, but they've made it clear that this is not the end of their retail operations, is it?
No, they do actually confirm that to AM. So AM did ask the question, but as we've been reporting over certainly the past 12 months or so, they are selling off bits and pieces. So it'll be interesting to see what's next, and also how L&L Automotive tackle the business, and what they do with it now.
Yeah, you're right, and we'll see. I mean, see what they're doing, and David Kendrick. Maybe we'll have to get David from UHY on at some point as well, and get his view on the market of what, because he's involved with these acquisitions and mergers at the minute, as well as many others in the sector. So maybe we try and get David on the show at some point in the future.
Yeah, because he does actually point out that geographically this is a good fit for the business. It's based in Hemel Hempstead. It's adjacent to L&L's existing car retailing business, so it is a good fit.
Exactly, and a story that we've covered numerous times.
Yes,
it's a bit of a boomerang on this one, isn't it? With what's been happening around the Mitsubishi motor dealers and the UK presence of Mitsubishi, and I know listeners to the show probably thinking, "Oh, Mitsubishi again," but International Motors have actually completed the acquisition of the Mitsubishi Motors in the UK after-sales franchise operation from the Japanese brand in a long-term importer who have been the long-term importer for the cult car company. So I think to those that have maintained that Mitsubishi aftermarket, who have obviously lost the new vehicle franchise, I think this is fantastic news for them. At least it's secured, and they know they've got somebody operating it in the UK.
Yeah, this is good news. It's really welcome news. It brings some certainty to a lot of operators, knowing that the after sales will be handled, and especially by International Motors, very good operator. Obviously the importer for Subaru and Isuzu in the UK, and this is a good home. It's a good fit. This story goes on to say that the business will be staffed by the existing Mitsubishi after sales team, and headed up by Toby Marshall, who has been a director at Mitsubishi Motors in the UK for over 12 years. So some welcome continuity there.
No, definitely. And there is a quote in there from Rob Lindley, who is actually a friend of the show and been on the
Yes.
podcast. And he's the managing director of the Cult Car Company. Said that the completion of this deal ensures the long-term future for Mitsubishi after sales in the UK. Operating within the IM group, Mitsubishi Motors in the UK will continue to deliver the excellent standards of after-sales care, parts and supply and vehicle warranty that our customers have experienced and will continue to provide to our customers, UK customers, for many years to come. So again, welcome news there for the UK Mitsubishi after sales dealers.
And finally this week, it's a sad one, I'm afraid, and it comes from BBC News, and the headline is Honda workers in Swindon to face reality check after it closes. Now, this again is a story we've been reporting on for a long time, but it's really at the end of the road now, because the final cars were produced at the plant on Friday, 31st of July, and the plant will not be used for car production anymore. The property, as the site has been sold to a developer, and it will be turned into a logistics park. But it's probably worth just spending a little time looking back on Swindon, because at its peak it was producing 690 cars a day. And that final car that was produced on Friday, that's after 3.7 million cars have been produced since it opened in 1985. And just a bit of history. We do like our history on the podcast. The original site in Swindon was actually an RAF base, and it's where Spitfires were built and tested and flew from, and that was converted into the factory back in 1985.
No, and as you say, I mean, it is sad news. It's sad news not just for the workers, but for Honda and the UK market in general. But as you say, they've had a fantastic run at it, and I suppose the saving grace is particularly for Swindon that at least there's somebody's taking that site on and doing something with it. You wouldn't want to see a site of that size to be left empty, would you? I think that's one of the good things for the area and the potential employment opportunities in the area there. But as you say there, from moving away from Spitfires, moving into the Hondas, I mean, 3.7 million cars there, as you mentioned, Curtis. I mean, that's a significant output. And they talk about the first car was the Honda, then the Jazz and the CV were made at the plant, and then it was the Honda Civic that became the flagship for the location. They obviously exported right across Europe. So again, I mean, there's a lot to look back on for that site and location.
Yeah, and it's particularly sad. I mean, yes, you talk about the job losses. There's 3,000 jobs that will be lost at the plant, but also 1,800 jobs amongst local suppliers. But as recently as 2019, Honda Swindon was actually one of the company's most productive plants. But it depends who you believe. But Brexit didn't help. Didn't help the cause there for Honda, and they have taken production back to Japan. I don't know if they're producing in China as well, but certainly, most of the production will go back to Japan.
Yeah, no, like you say, it's a sad day for those guys down there, and you do feel for them, and let's see what happens now in the future. So I think that's a packed headline show for us this time, Curtis, as packed as we probably want it in the future.
Yes.
I think that's a great one. But I mean, as always, have a look at the CAP HPI editorial that Jeremy has given you a quick overview. Have a listen back to the interview there with Mike Allen, with a quick sort of sneak of the 5 key themes that he's talking about for the automotive sector. And as always, head over to the main headlines that we've been talking through there, and particularly interesting one there with Autocar as well. It's a fantastic deep dive from Jack Caffrey there into the Stellantis brand and the new Spotty car brand that they've brought into the UK market.
Yeah, although we do think that Autocar story was causing problems with our respective browsers. So thank you, Autocar, for that. But unfortunately, that's all for now. You've been listening to the weekly Motor Trade Radio podcast brought to you in association with eBay Motors Group. Thanks for joining us for all the chatter that matters. We're back next weekend with our take on the latest car retailing headlines from across the media. And in the meantime, as Phil says, don't forget to check out our midweek chat with Mike Allen on your podcast feed. So until next weekend, it's goodbye from me.
And it's goodbye from him.